What's going on, everybody? Welcome back to the channel. I'm so excited to have you guys here with me today. And honestly, if you've been rocking with me, if you're watching my videos, thank you so much. Please like, comment, subscribe. Tell me anything that you want me to do to make these videos better, what you want to learn. I'm here to just spread, the knowledge of trading and, sharing my journey with you guys every step of the way. As well as growing on the content creating side and the YouTubing side. So this is really just me trying to be as raw as possible because honestly, like everything else, you got to start from square one. This is my square one, so I'm trying to get better. So definitely help me get there and give me any feedback that, you guys feel like you would like to see. So I know you guys have seen the title of this video. And it is true, I made a huge mistake this week that cost me a lot in terms of money, but also in psychology. So I'm going to go over what that mistake was, how that affects my outlook for this week. I'm going to lower my desk a little bit just to get a better angle. But we're going to go over that mistake, show you guys how it affects what I'm looking for next week, and then we're gonna go over overall bias and what we're looking at for in terms of entries next week, like we always do. So let's get into the charts. Let's talk about something. So before I go over the mistake and what I did and what went wrong, I want to talk about an important aspect of trading that I haven't talked about as much before, and that is psychology. So a lot of traders will say, and I've seen the quotes all over the place where it say like trading is 20% technical and 80% psychology. Well, there is a lot of valid reasons for that, and I probably could make an entire series on that. And I do actually eventually want to talk about some of the issues I've had with my own psychology and trading, and then how I overcame them. So maybe that would be like another video series. But just in general, like psychology is incredibly important to your trading journey. You will not be a successful trader without having some kind of psychological principles or rules when you are trading. And they really, really are needed, especially when you're losing. But I would still argue as well that they're also needed when you're winning, because the highs and lows of trading they're very extreme, they're very polarizing too. So your emotions are consistently kind of on like this pendulum as you're in trades, as you're out of trades, as you're managing trades, as you're being patient and looking for trades. So your psychology, your mindset, your frame of mind while trading is so important. So kind of going into my mistake this week, so every time before I get on these videos, I try to clean up my charts a bit because I am marking these things up a lot during the week. I probably, maybe next week I'll show you guys what it looks like before I clean it up. But I try to clean it up when I start the videos. So that way it's not, you guys aren't looking at a bunch of lines under, really trying to understand what I'm doing. When, trading is like that. I feel like you're looking at a bunch of lines, trying to understand what you're doing. But I tried to clean up my charts, and I think I deleted one of my resistances that I had maybe in a prior video that it cost me because it actually was critical to my trading plan. So everything that I have on my chart is critical to my trading plan. We go over structure all the time. Structure is critical. I talked to you guys about price action and the way the candlesticks forms. That's critical. And the third thing that's really, really critical to my trading plan is my support and resistances. In fact, there's two components that I haven't went over yet of my trading plan on any of the videos, and that's time frame correlation and support and resistances. And for me, those two really go hand in hand. And they often help me again supplement the price action, the way the candles are forming, and the structure, the way the candles are forming together on the charts. So when I have those four components and I understand how those are moving, my psychology on the charts is easy. I know what I'm looking for. I know when I need to be patient. I know when I need to execute. I know when I need to, up the lot size. I know when I need to decrease. It's very systematic and methodical for me, which is how it should be once you have, a bunch of systems in place, and a bunch of rules in place, so you can honestly trade comfortably on the charts. When I am missing just one of those, I know that my mind gets very frantic, and I kind of get into a like a role of like revenge trading, or I'm just looking for an entry, not the entry, based on my rules. Like, it really throws me out of my sync. And honestly, before it would, I mean, it still does caused me losses, like a lot of losses in my account. But also before, it would not only would it show up in the amount I had in my account, but also in the way that I would approach trading the next day or the next week, or sometimes I would need to take a break for a month. So it's very important that when you create your rules, your trading rules based on the technical stuff, that you also have psychological rules built in. And so that's what I had to rely on this week, because I did take some losses. I missed opportunities, and arguably I would say that a missed opportunity is worse than a loss. There's nothing worse than knowing that you could have entered and should have entered into position, and then you have to now watch that position be profitable, and you're not there. You're not in it, and you're not gaining from it. So those for me suck more. And those are harder for me to get over. So I'm going to go over what happened this week. And then we'll talk about what happened, what we're looking for next week. I'm going to go over what happened last week, and we're going to go over what we're looking for this week. So this resistance I have right here. So I'm not sure if I went over it before, but I'm going to just talk about it again. All my support and resistances are color coded. What does that mean? Every color that I have for these horizontal lines that you see on the charts correlates with a specific time frame. So support and resistance and time frame correlation for me go hand in hand. My blue support and resistance lines are almost always built from the weekly or the monthly, right? They always line up to some key level, pointed structure, support or resistance formed by these candlesticks that align with these blue lines. So when I enter, or I'm getting close to one of these blue lines on the lower time frames, especially my entry time frames, I'm looking to capitalize off an entry, because more than likely, based on how it has moved before, touching these support and resistance lines give me huge moves in the market. They're very strong. It requires a lot of data to create a monthly or a weekly candle. Like, if you think about it, in every monthly candle, there's at least 28 days of worth of data. And in every daily candle, there's 24 1-hour candles. There's 4 8-hour candles. You have to, I meant to say, 8 4-hour candles. That's that right? 4, 8, 12, 16, 24, 5. Okay. I'm getting my math wrong. But there's 6 4-hour candles in a daily candle. There is 24 1-hour candles in one daily candle. And there is at least 28 daily candles in a monthly candle. So you can see why my monthly and weekly resistances, one, there's not a lot of them, because in general right now, with how UJ's been moving, and when I say right now, I mean within like the past couple years, it hasn't been swinging like crazy amounts of pips per year. So we tend to stay within these weekly or monthly ranges. For my daily, since this is also a structure time frame, I do base structure off this time frame sometimes when my H4 is not clear enough. Support and resistance here are very important because they often line up with market structure. What do I mean by that? So I know we've been going over structure a lot, because this is how I look for my entries. So remember this giant push that we had on the daily. You saw that it came up, it created resistance. And again, resistance is a bullish or a blue candle, followed by a white or a bearish candle. And I want like a candle, not like a doji, like something like this candle right here. That wouldn't do it for me. I need something thick. I need to see that price was actually, really active in this time period. And then that's what I like to mark as resistance. Otherwise, I'm looking at it as a point consolidation usually is what a doji is on a higher time frame. Or in my case, I look at it as price showing me that, buyers and sellers, neither one is in control, or in price is kind of confusing where it wants to go next. So I like to see it like this: bullish, bearish. We mark that resistance off, then we come back down to a level of support, and then we come back up to a level of resistance. And I'll just pause right here for a second because this actually comes into play of how I made my mistake. So I remember last week we were talking and I said that I'm bullish on the dollar, and I still am, but structure has not shown me that we can confidently take buys. Let me say that again, that we can confidently take buys because structure is still going to the seller's side. And we see that because lower highs are still being made and maintained, and supports are being tested and possibly broken. And we'll see on the lower time frame that this support was actually broken. So I am still bullish because I know what news is coming. As long as the Fed still decide to cut the rates next week, the dollar will have a lot of bullish movements. That's just how the charts move when fundamental news is like that. But right now, the charts are not showing that we are looking for buys. Therefore, because I do not counter trend trade, I am looking for sells. But last week I was in buys, and I remember I told you guys why, because of the way that I look at transitioning markets, and I'm still learning in this area. So it's taking me some time to understand when to get in and when to get out. So last week we discussed how, I'm just going to remove this for a second because I might have to redraw it. But we discussed how if we're seeing a market that is in a selling, so we're seeing a low, a lower high, a low, a lower high, a low. If I see that the market comes up, forms another lower high, but then forms a higher low, meaning this low does not break this low, I am going to look at this area for a possible entry, which is exactly what I took right here. I took an entry, and I took several entries along this road. Let me see if I can copy paste it. Hold on. Control C, Control V. Nope, it doesn't want to work with me. Clone it. So I took this trade. I made some entries. I think I made one here, and then I made another one based on a continuation somewhere in this area, right? And I know that I remember I missed this one, but I saw it, so I knew that as long as the market made another high low, I'd be looking for an entry. So I made another high low. We entered, and I think I had 3 entries open by the time I got to here. So now we're up to the point where I think it was Labor Day, where we were, and I was in profit almost $2,000. The problem was I did not have this resistance marked off. So this is what this looked like. Let me move that off. This is what it looked like to me. I did not have a resistance marked off here. I was looking to see on the lower time frame what would happen. When I went to bed, this was the last candlestick pattern I saw. This was the last candlestick pattern I saw. And if you know anything about candlestick patterns, that is actually a bullish candlestick pattern. It is. It's a variation of a bullish engulfing, because we had the market trying to come down, created a level of support, and then this bullish candle basically ate the next 2 is what I like to say, but it engulfed the last 2 candles, which shows me, from my knowledge, this is a bullish market. But what happened was, while I was asleep, and this happens, while I was asleep, we had a huge drop. And I could not figure out what was going on. So this is when psychology comes into play. I probably woke up and I think I lost around $800 within, let's say, $100 an hour while I was asleep. And I couldn't figure out what was happening. I didn't even think I closed out until like right about here, because I didn't want, I got stopped out this continuation trade, and I didn't want this one to result in a loss. I hate. So that's, again, one of my rules. Do not let your winning trade become a loser. So I closed this out in profit, but it was only about $300, which isn't a lot because I just told you guys I was up almost $2,000. So once that started happening, I was like in a frenzy. I'm like, yo, what did I do? What did I do wrong? Like, especially now in where I'm at, like in my trading journey, like I don't make mistakes like this often because I've made some bad mistakes before, to the point where it really hurts to be on the charts. But now I was like, I know what I'm doing in a way. Like at least I know where I'm like really weak at. I know where I can go wrong. Like I told y'all like last week, transitions aren't my best form of market, but I'm trying to learn. And the only way for me to learn is to kind of trade through it and see where I'm supposed to be picking my trades as where I'm supposed to be getting out and things of that nature. So I want to say like all of Tuesday, I made bad mistakes. I thought this was, a support because, again, I'm thinking we're still in a bullish market. I'm thinking, okay, it's just coming back to test this level of support. Let me just draw it. I was thinking it's coming back to test this level of support. This is H4, so we give it purple. And it just went through. I was like, okay, but look, there's all this seller's exhaustion. We'll see a reverse. No. We had a tiny push, a tiny bullish push, and then the sellers took back over. And so I got into a little bit of revenge trading. Then my psychology was down because I was wrong. I lost money. But I'm still up on the account. That's the crazy thing, and I'll talk about that in a minute. But I was like, man, like where did I go wrong? So this is when psychology becomes important. So for me, I felt like I was very much lost in the charts. When I feel like I'm lost in the charts, I have to bring myself back and ask myself, who is in control and what is happening? The first thing I will do is I will go to the higher time frame. So I know that on the monthly, we're still in this candle. There's a lot more data left to be said on September. So I was like, okay, well, let's see. September is looking very bearish. But even last month, we had a lot of that exhaustion. Like we saw the market opened and it pushed it all the way down. And then by the end of August, we have this exhaustion tip. So I'm like, okay, well, it's still very early in the month, but I could see how we could still continue because there was no blue candle here after the bearish candle to signify that there was a level of support created on the monthly time frame. So then I'll go to the weekly and I say, okay, well, what is the weekly showing me? Is it lining up with the monthly? And that's when I was like, okay, same thing here again. We did have a level of support being created by this one and these two candles. We had a strong bearish candle and two bullish candles created support, but then those two candles were engulfed by this bearish candle, the strong bearish candle showing a lot of seller price action. Then again, we had another level of support created with this bullish candle. So I was like, okay, so if we're still at a support, then I would see higher highs and higher lows, or this wouldn't be broken. So then I was like, well, let's see what the daily says about this area, because it's not enough candles for me to make really a solid decision on what I'm seeing. But right now, I'm not seeing enough that's saying that we're actually in or ready for that reversal. So I went down to the daily, and this is when I realized my mistake. I looked at this and I was like, I remember I was looking at this because I had strong, price action showing me nothing but sales. I remember my original bias was that we had this here. I was entered in here. I took this all the way down to that level of support that was previously created, and then I got into that buy, that we were in last week before Labor Day, and I wrote this up. So I was like, well, where did I go wrong? And I remembered two things. So one thing, if you remember me saying last week that I was looking for, I'm going to make myself just a tad smaller if I can. I was looking for my exit to be around this negative 27% based on how strong the price action was showing me sells. Also because this giant retrace was only back to 38.2, which signified a strong bearish, movement in the markets toward this negative 27%. We're on the higher time frame. So even if it's a strong move, it still takes time for that to develop. All right. So that's when I was like, man, I actually think my original bias that I had of where price is going to go is actually still in play because I never saw a lower high be broken. Then I said, well, how did I miss this area of resistance? And again, I tell you guys all the time, I draw resistance the same way, a bullish candle and a bearish candle. And then I realized right here in the middle of it all, there was a beautiful resistance that I missed. Bullish, bearish. That should have been marked off, and I think it was, and I'm genuinely think I just deleted it. But even if I missed it, either way, the mistake was made, and I need to learn from it. Because I should have been able to catch it again. So, I made this mistake. I did not have this resistance marked off, and if you look, because we did not have this resistance level marked off, a lower high was created at that same price level where I could have been able to get it. Not only get out of the buys that I was in, I would have been able to maintain my selling bias towards that negative 27%. And I would have been allowed to get in an entry that made a nice strong push that was far enough at the top that by the time that we got news last week for the unemployment rate, I would have been fine. I could have held and gained all of this. Let's say I entered in somewhere right here. Look at all the opportunity. Almost 500 pips missed in opportunity because I have one key part of my trading plan missing. So it's incredibly important when you are trading to know what you're looking for, because when time, and these will happen all the time, like you don't always feel comfortable with market direction, but if you feel comfortable in understanding why you get into trades and get out, you will always be comfortable in knowing, okay, well, I'm not trading right now, but it's because I'm waiting for something. So you have to be able to keep your confidence even in times like this where I see I made a mistake, but I'm like, no, I know, like if I had this resistance lined up, I would have traded completely differently. But because it wasn't there, because it was missing, my bias was incorrect, and I just wasn't able to capitalize off the markets like I like to. So it was more of a learning week for me, but I still took away some wins. Like I was able to see where I made the mistake. And usually I have like 3 rules that try to help me reel me back in psychology, especially when I start going on a losing streak. One is I try to limit my trades to at least 3 a day. And that depends on my account size, what lot size I'm using. And then the second thing is I will either step away from the chart or decrease like even more decrease, like maybe try to do 1 trade a day, or I'm not trading today, period. And then if none of that is working, then I'm like, yo, I have to take a break. So I got to the point where I at least decreased my trades. I still am up. So I remember telling you guys I started off with $200 in this account. I am at $500. So I'm still up. It's just that I gave back my profits to the market, which I don't want to do, and I'm trying to limit that as possible, because giving the least amount of profits back to the market is what helps you become really successful in this niche, from what I've seen and what I've studied. So that's the mistake. That's what happened this week. It's hard to come on here and talk about things that when they go wrong, especially since since I started, I was really on a roll. Like, I was really good in August. Like, August usually is my great months. Like, I get in, I get out. I have my biggest days every August. And, I mean, I showed you guys, like, that was the best way I've ever traded. Like, every entry was clean. It was on point. So, I was really riding the high of that. To take the L after that kind of sucks. But this is the area that I accepted that, like, we as traders probably lose more than we win, But if your R&R, your risk to reward ratio is good, then you'll know you'll make it back. And I truly believe that I will make it back because I really believe in my skill set, and I have confidence that I know that I just can get right back on it. So that's what happened this week. Probably just made this video a little bit longer, but I really wanted to explain to you guys and show you guys what happens when things are not going well, because honestly, things are not always going well on the charts. So you have to be able to reel yourself back in and then lock back in and honestly execute. You know, for me right now, last week was last week. I learned from it. I got what I need on the charts, and now I'm looking at where we're going. And of course, as always, let's see where we're looking for entries. So let's start with what we always start with when we're talking about this upcoming trading week. We look at news. And I think I remember telling you guys last week, September is always heavy in news. And now I realize for me and my trading plan, I'm probably going to try to decrease the amount of trades that I take in September and be more selective, just because August is usually really great for me. And then I have historically always given my money back in September, which kind of takes the wind out of me for October. So I don't want to have to do that this time. So I'm really only looking for 3 trades max this week. Only 3 trades max. And I really want to hold myself to it because I want to be able to get in and have enough capital for next week when the federal funds rate is cut. Because I know there will be bullish movement, and I want to be able to have a really good entry in the account to hold that entry. So this week, last week we had unemployment rates, crazy news. This week we have CPI, aka inflation, and PPI, which is also inflation, but of like wholesale items that are sold by producers. So let's talk about last week. Last week we had the unemployment rate come in, I think, at 4.2, which is the same as the last month's reading, but honestly, it's still in line with what the Fed says. They wanted to have controlled, decrease or increase of the unemployment rate, as well as controlled decrease of inflation. So we saw last week, unemployment rate is still about the same. I think, what was the other one where they had like jobs added to the market? Yeah, like job openings. There were less job openings. There were less unemployment claims than actual. And ADP, we had, it was less jobs too added to the market. So you see that it's not that people are not having a job, but there aren't as much openings for jobs, which is kind of stable from the Fed standpoint. So I think they're seeing what they need to see again to basically be on track with the cut that they were looking for in this year. So the next thing we have to see now this week is inflation. If inflation comes in really high, and I mean like what are let's say we get like a 3.0 or something crazy, or a 0.3 or 0.4, honestly, I think that our likelihood of a rate cut will be slim to none for next week. If we see inflation come under these expectations, we will most likely get a very strong case for the Feds to rate cut next week. What that means for this week, I know that these numbers are priced into the market before the actual news comes out. So what I'll be looking for is based on structure. If we continue this selling structure that we've been seeing, I'm thinking that the news for inflation will also be bearish. That's just based on me seeing structure. As long as I continue to see lower highs and lower lows being made, that's still going to be my bias for entries. However, my bias for the overall outlook, I'm still thinking bullish until I see otherwise based on the data shown here, and that's just purely based on the Fed's looking for a cut rate, looking to cut the rates. So with keeping that in mind, I know that we are, again, talked a little about this earlier, we're approaching I think this is a monthly support zone. It kind of goes in line with what we're talking about though, because if we see a continuation or we see inflation come in under expectations, we're going to see more of a push. Like, I used the wrong one, but we're definitely going to see more of a push. Like, we're just going to see like more lower highs and lower lows being made. and probably a nice wick down. And then, you know, if the Fed cutting of the Fed rate comes around while we're at this key level, we'll definitely see like a giant push and then a move up. And I just drew that really dramatically, but that's what we're looking for. So honestly, that's really it for my bias, so I'm still looking for sells. This support was already broken last week. Because this is a daily support, when I don't enter off daily or H4, I try to go like 2 time frames down. So since this is the daily, I go on to H1, and H1 really correlates well with the daily. And I am looking for, again, like when I see like a support, this is a support based on, go back so you can just show it. This is the support based on this level, and then also these level being tested. So I usually will watch it on the 1 hour to see if the market's going to continue to do the same thing. And usually if it does, it will create a higher low or break a lower high, which it did the week before when I got into those buys, which is why I got into those buys. But this week it did not. It actually broke the support. For me, it broke cleanly on this candle. So the logical thing for me would have been wait for this formation of a new low, and then the pullback for another lower high. Unfortunately for me, this lower high happened during unemployment, so I cannot enter during news. It is nasty. The spread is nasty, and the market's just way too volatile. So I set this one out, but I did mark off this new low. So I figured, you know, price will come back to this low, and then from there we'll take it, see what kind of entries we'll get. Let's see if it would respect the support, and do a bearish bullish candle, or would I get like another pullback and then maybe a break of this. But it looks like right now it's still testing this level of support. So I'll either get a push down and up, and then I'll be able to enter somewhere on the next lower high. Other than that, we'll just see. I think this is a week where I might not be too actively trading and more just analyzing and watching price, because as these big news events come out, things just get a little bit confusing for me. So I just try to be as comfortable as possible by just, I don't want to be in the trade right now. It's not giving me clean structure. I'm not getting clean entries. So let's just chill and, you know, learn and just watch how the market is moving, because an entry will come, and that's what you always have to tell yourself. So I'm coming fresh off a losing streak. I don't want to take any unnecessary L's that I already took last week. I got that out of my system. My next trade needs to be my best trade, which means I need to be the more patient than I have been in the past week. So I'm willing to, you know, kind of step back a bit, take more of an analysis role until I'm ready and I really feel secure in seeing, you know, the trend reversal, meaning our trend is breaking, and now we're looking for buys, or the continuation of the sells through our seeing of market structure forming through lower highs and lower lows. So that's really all I have for this week, guys. Like, thank you for watching through the video, coming to the end, learning something with me. I know this one's probably going to be a little bit longer, but I really wanted to, you know, share with you guys about what to do when you make mistakes, and really how to keep your head and just get back up and keep pushing, because half the battle in trading is getting back up and just pushing through your learning and taking L's. So without further ado, that's it for this week. Thanks for joining me. Again, as always, if anybody you know want to learn trading, like, you know, what I'm doing, just send me comments, send me, you know, suggestions. I'm here to be open and listening ear and talk about whatever it is that you guys want to see. As for me, this is what I'm doing this week. This is what I'm looking for. And we'll see how well we did next week on the next video. All right, guys. Peace. Have a blessed trading week. Bye.